Good morning, Bosun. Thank you. Thank you for having me.
It's nice to have you down there. Thank you. So let's see, quite a lot of the news box seems very heavy in terms of the various news items that we should be talking about. Take us through this.
Yeah. Yes, indeed. There's a lot to unpack this morning. A lot of developments have happened in the last few days. I think what I'll start with is Britain's Prime Minister Theresa May's visit to Nigeria. She came to Nigeria yesterday, and but this is generally good news for Nigeria. It was expected for this to happen. Now that Britain is exiting the EU, it is expected that they will be renegotiating existing trade deals with key trading partners. I think although there's nothing, the details about the signed economic and security agreements are yet to be revealed. But I think the biggest story out of that development is that she pledged to invest $4 billion in SSA over a period of 4 years. She also made a bold statement that she wants to be the largest G7 investor in Africa. That is a bold, very bold statement, and require much more than that £4 billion. I think what she's referring to there is she wants to, in essence, she wants to encourage...
I need to, let's clarify this as we move on. The $4 billion is to be invested in SSA, which is Sub-Saharan Africa, and not Nigeria alone.
Yes.
Yes.
Yes, so indeed. Yes, indeed. That's correct. Yes, indeed.
Yes,
that's correct.
We need to clarify that.
I think what she's... Yes, I think what she's referring to is that she would encourage UK investors UK private sector investors to set up shop, to be more involved in Nigeria, particularly due to the fact that Africa is a relatively untapped market compared to other developments. And indeed, there are significant returns to be made if investors can wade around the nitty-gritty associated with the difficulties associated with setting up your businesses in Nigeria and what have you. But I think that's generally good news for Nigeria, and hopefully we'll see more of trade and investment ties from the UK and in Nigeria. You said, yeah, that $4 billion has to do with Africa alone, but Nigeria, I believe that Nigeria will receive a big chunk of that because we have long-standing historic ties with the UK. Another story that I would like to touch on this morning is Brent. Brent is up 0.18% to $77.28 per barrel. I think that is about a 5% increase from around this time last week. Oil has risen because of Iran. We're seeing lower demand for Iran's oil. We're seeing buyers already reducing their uptake of Iran oil, despite Iran offering discounts for their oil. The US is not wavering on its hardline stance on its sanctions on Iran, and what that would do, the US is saying that it wants to completely shut off Iran's exports. It wants to take Iran's exports to zero. That's even steeper than sanctions under the Obama administration, which only took out about 1 million barrels per day. I think the implication of that is that oil prices are likely to increase significantly in the coming months. I won't be surprised if we end the year much more above $80 or even closer to $85 per barrel. So that is very good news for Nigeria.
Okay, let's bring it home a little bit. Adim, let's bring it home a little bit. Two of the stories in the news box, two of the items in our news box has to do with the local market. First, the president says, no, I'm not signing off yet on the PIGB for constitutional reasons. On the other hand, NNPC is moving to open up condensate refineries in Imo and Delta State. Take us through this domestic high-level news information.
Yes, President Buhari has refused to or withheld his assent to sign the Petroleum Industry Governance Bill. The reasons, according to the press release, was due to constitutional and legal reasons. I think there are issues over the clause that stipulates that only 10% of the revenue will be attributed to the government. I think there are issues. The government's issue is that would reduce money shared to FAC. My issue with that is that this bill was passed in May 2017 by the National Assembly. Why is it taking over 12 months for the presidency to raise their issue, particularly as we're in this charged political climate? Before anything can be done in the National Assembly, will probably be this time next year. And let's not forget that before this bill can be passed, if the Ninth Assembly is dissolved, a new bill will have to be passed by the 10th National Assembly. So this sets us back, let's say, 2 to 3 years. So it's a very negative development that's happening now.
Yeah, again, Adim, I would say this, and again, if the National Assembly representing the interests of the Federal Republic of Nigeria signs a document which will be globally binding on Nigeria, that we are going to get only 10% of the oil proceeds, why would our legislators prepare such a document for the president to sign? We own this product. That's the first point of call, isn't it?
Yes, but I think there are issues. I think it's more to do with legal semantics. I'm sure this document was extensively consulted by the respective stakeholders. So if the National Assembly passed that bill, and it took, let's not forget, it took several years for the PIGB to be signed. And let's also not forget that this PIGB is just one component of the PIB. There are other components of the PIB that haven't even been passed by the National Assembly. So this is a negative development, in my opinion. I think this issue should have been hashed out sooner, much sooner. This shouldn't be the time that it should be brought to the table.
Okay, let's move on to other things. Are we doing well on electricity right now? Let's look at what is good and what is not so good.
Yes, we're making improvements in electricity. We're seeing power up to 3,819 megawatts per hour. We're seeing constraints, gas constraints, grid constraints reduce. And what is important to note is that there have not been any water constraints for the past 2 months. You can attribute that to rainy season. Water levels are very high at the dams, so that is good news. We're seeing power creep up. If you look at the graph, power has creeped up consistently in over a week, so that is good news for commodities. And also, we did our inflation survey not too long ago. I've seen that prices have declined month on month. Compared to this time in July, most domestic commodity prices have declined. The likes of Semovita, Gari, rice has gone from 15,500 naira for a bag to 14,500 naira to a bag. Tomatoes has fallen sharply from 20,000 naira for a basket to 10,000 naira for a basket. So I think you can attribute that to the harvest season. The harvest has resulted in an increase in output, and that has translated to lower domestic commodity prices.
Yeah, I can see that I can see more of the green shoot than red, and 2 neuters on the screen, the domestic commodities price movement. That looks like some good news. The last time we had this tomato conversation with one of your colleagues, I guess that was last week, I was a little bit upset with the price of tomato at 20,000, at about, well, now let's talk about 10,000, 8,000. Fine, we can do it lower numbers. If this is the harvest season, then we can enjoy that while it lasts. Because as soon as we're out of this season, then we're back to this high end of this commodity in terms of their prices at the marketplace.
Yes, that's correct. I should say that there are several caveats. I think this is the harvest. We're approaching the end of the harvest season, but at the end of Q3, we should begin to see a rise in demand. In Q4, we're going to start preparing for the Christmas period. And knows that most people buy goods in advance, much in advance of the Christmas period. So that increase in demand will probably be felt in commodity prices. So commodity prices are lower now, but they're likely to increase going forward.
Yes, but are we likely to see a significant uptick in terms of prices when we look at our 1-year high? If you look at that page that is currently on screen, the far right column there was about the 1-year high, Gari at 16,000, rice at 22,000, 11 at 11,000, beans at 34,000, all the way to cement and tomato. Do you think if we go back to this high price period, are we likely to see an uptick in those extreme high price levels?
Well, my issue is that I think the crisis that's happening in the Middle Belt between the herdsman and pastoral has really displaced farmers, a lot of farmers. And the Middle Belt, the North, that is where most of these commodities are produced. The displacement effect has really made these commodities in short supply. So my estimation is that we'll begin to see a pronounced effect of this crisis on commodity prices in the later part of the year. I really hope that doesn't take us back to, like you said,
Adim, don't spoil moods before Christmas or end of the year. Yeah, let's just hang it there for today. Don't get everybody panic, thinking that prices of things will go high. But it could happen. That's why he's an economist and a research analyst, telling it as it is. But just keep that at the back of your mind, just in case. Let's come back up to you after the break. We'll continue the conversation around the new transfer pricing rule.